Welcome to Smart Money Trading version number 2. In this video we are going through the Apex system. All systems that uses reversals is basically smart money trading because you go against the crowd, right? And this is another one. This is a more advanced one. This is for professionals that trade either full-time or at least trade with real accounts. Because you need to have a good understanding about trading. You need to have a good understanding of what I'm going to show you. There are no support about the tools and how you use them. So this video explains it, and you will have to use this video as your guide. There will be no questions answered about this system. So pay attention and it will be all fine, right? The first thing we do is we hide this one past yesterday high low with this I symbol here, because that is for S&T system. Okay. Now we're going to add a new indicator. It's called weekly open high low. This one. Weekly underscore O underscore H underscore L. Search on that one on Tradingview and you find it. Okay. Click on it. Gets added to the chart. Doesn't look that good. So we go up here, click on settings, take away the open, we don't need that one. Then we go here, click on line with breaks and line with breaks, like this. Easier to see. Okay. Then what we need to add, that we are going to use, is an ADR tool. And there are different ADR tools. One is called ADR high-low. But we are going to use a regular ADR line because we only really need to know what one ADR is to measure the rest of it. Okay. So we're going to add that one as well. Like this. Down here you have the ADR. And just to make sure that we have the correct one, we have one called 120. We set this to 5 because then we get 5 days average price range, right? So 5 ADR. If you use MetaTrader, it's just a regular ADR tool, set it to 5. Okay. This one we only will be using on daily chart. So for now we don't really need it here, but we want to use it later on. So then you can just double click anywhere on the chart, or of course not in the indicator window, and it will be hidden, but it's still there. And if you want to use it, you can use the data window, which is the fourth symbol at the very right of your TradingView panel. You don't see it here because it's not in the recording window. If you want to see the number without double click again and show this one, right? Okay, so the Apex, which is one of our best systems, or we have 3 systems and all of them are good, but Apex was based on this, right? On peaks. That's what Apex means. It's a peak. It's a reversal pattern. And the way we do this is when you have a market, when you're here, you look at the roof, you look at the floor, right? And you see how far can I go down, moving down like this, before I have to go up again. See, this is the bottom, right? See that? So this is my down peak, right? And this is my up peak, simply because if you're here right now, you can't go up, it goes down immediately. Therefore, this is a peak. This is actually a retracement, but this is a peak, right? But this is also peak. See that? So basically what we do, let's say you are here, for example, right? If this is the peak, you would go down like here to say, where is my next peak? Is here. Then you have to go up again. When you can go down, it's still higher highs in this direction, right? So this is the peak. Here's another peak. If you go on the low side, as long as you can go down, you don't have your peak yet. Here you have your peak, because from here you need to go up for that previous week. See that? So this is the peak. As long as you can go down the stairs, when you can't go down anymore, then you have reached your peak. When you can't go up anymore, then you have reached your peak. When you're here, you have to go down again, right? So this is your peak. Okay? The reason we use this will be easier to understand now. All right? Assume this now. This is our peak day, and the week that has the peak, that was a rhyme, yeah, I know. And the week that has the peak, you can do it like this. Look for the highest price of that week. You can mark it out with an arrow or anything like this, right? I have more charts than this if I want to, but right now I'm only using one chart because I know if many are free on Tradingview, so you only can use one chart, right? Then what you do instead, you go to the daily, it's mentioned as DIA up at the time frames, like this, all right? The only reason I do that is because I want to, whoops, we have a repeating. The only reason I do that is because I want to know the daily ADR, and if you do that on hourly, it won't show the right numbers, even though the code says so, but it doesn't do that. So I can double click on this one, and then I go say, this is my highest, right? And I need to do this to see the data here. And you will see that this one is 93 pips. See that? 93.3 pips. That's one ADR on the 5 ADR indicator. Now I want to show you how you can do this. You can also use, see here. Here you have all the different indicators and their data. So if you hide this one and you go here, you see at the very bottom there, you can see the ADRs. You don't need to show it actually on the chart to get the ADR. Just showing you what you can be doing, right? It's probably easiest if you just watch the indicator down here and the candle that you are watching for, the highest, the peak candle, and its ADR, right? So we know we are looking for 93. I normally look at the one that is at the same level, that is 91 to 93, 91, somewhere there. This is not perfect math, so but we take the highest number, which is 93. Okay, good. We can highlight one. We go back to our 1 hour chart. There. 93, I said, right? So we take the highest point. 93 is like there. Okay. And what I've done, I changed my Fibonacci tool a little bit. I'll just add it here like this. You see that I have the regular Fibonacci here, right? If I want to use that one, I just check this once and then I uncheck this one. There's more job, but that's how you will have to do it, right? And on the ADR, I just set 0, 1, 2, 3, 4, 5, 6, 7, so on, because it then is 100% between each line. That's what we want, because we're going to measure one ADR and then 1, 2, 3, 4, and so on, right? If you are an advanced user, what you can be doing, you can use minus values on this one, plus values on that one, like it is, and then you can, when you draw them at different directions, you get Fibonacci in one direction, you get ADR in the other direction. So you can actually use the same tool, but I'm not going into that right now. Okay. So since we know this is one ADR apparently, so if you take from the bottom of it to the top of it like this, it becomes much easier to find ADRs, right? And what we want on the Apex system, we want the market to pass 3 or more ADR. So as you can see, up here down to here, it was 2, little more than 2 ADR, right? And we want 3, and normally because this one is normally next mode down, right? So we want to pass 3, so we want it to come to a minimum to this one. there is where we look for the apex trades. Okay, so find the peak, go measure the ADR, use your Fibonacci tool, draw your ADR for 3 to get volume, right? Because you want volume, otherwise why take a risk in trade if you can't really get any good move in that direction? But again, it's always optional. Use the ADR if you like to trade 2 ADR, 4 ADR, 5 ADR. They will be different almost every time. 3 just to measurement to decide that this is the minimum volume I want in my trading, right? I haven't checked, so please forgive me if we need to do a few of them, but this is euro pound, right? And as you can see, when you're up here, this is a peak apparently, because then you have to go down. And this is a peak apparently because when you're here, you have to go up, right? Or go up in the here. If this was moving lower, if this week was here and the next week was lower, then we would find our peak the next week, not this one. But this is the lowest, right, on the downside, and this is the highest on the upside. So this is our peaks, and these are the peaks that we use to measure our ADR, right? So we take this lowest one like this, we go to our daily. I normally like a color box because it's much easier to find, or you can just remember the date when this candle is, and then of course go to the daily. Your way is your way, my way is my way, like we always say, right? There, and we double click to get ADR. It says nothing because we need to expand this one. That's why it's better to have the data window sometimes, because you don't need to expand these indicators. 73, right? So we're done with that. We go back to, remember, you can do this in the beginning of the week or every Sunday or whenever you like, so you are prepared for the next week. So you know which one has passed 3 ADR and which one has not. Okay, 73. So we want to know, there's the colored box, that was the bottom. Now I take this little tool called price range. I go for 73 there, right? That's 1 ADR. I wish it was an easier way to do this. It's probably, if you have some advice on how to do it, let me know. But this is how I do it, and then you do it like this. Instead of have to copy the box over and over again to count ADR. And here you can see we come up to 3 ADR here, right? This is also good if you want to use ADR for the SMT system. If you have 3 ADR and get the Thursday engulf and it looks suspicious, then you will feel much better if you know it's 3 ADR reversal for sure. But in this case, it went up here, start to go sideways, which is normally do here because many traders follow 3 ADR for sure. Instead, it pushed to 4 ADR, 5 ADR. Each of these levels are important, of course, right? And when you come up to here, you see, okay, here I have a engulf, right? And if you were doing the SMT system, you would of course look more to have probably your stops above the 6 ADR, right? But there is no rules that is better than setting it above the wick and so on. But if you want to make it simple. Now we come to Apex. And Apex works like this. When you come to a peak, you want this one to U-turn by 1 ADR. All right? You want this peak to U-turn by 1 ADR. And you're not calculating a new ADR. What you do, you can take a box or one of these levels like this. If it hits the ADR perfectly, then you will of course see it. But in this case, When the market closes at this level or below this level, I know I have pushed through one ADR. I have done 3 ADR on the upside. I am at the new weekly high. All right. So, like I said, this is not for newcomers. There's a lot to keep track of when you're new, but it's easy when you have done it for a while. So, the first thing you want to have is peak, right? Peak up, peak down, doesn't matter, right? You want to have it will be, no matter how you see it, it will be, see, how should I explain this? Yeah, I mean, you need to be at the new, at a level that is higher than previous week, but you will, because otherwise it's not a peak. So, right, I don't know if I need to mention that, but you should be like here. See, this is the previous week, and this is the next week, and it's a peak, because a peak can only be at the higher than the previous week. So we skip that because you understand that, or it will be anyway that way. A peak, right? You should go 1 ADR in the opposite direction. Okay, that's what Apex is all about. Now when we have done that, my favorite way of doing this when one ADR has been done is to use the Fibonacci tool, going for a minimum of 50% or more, looking for an engulf, go short, and go for 1 or 2 ADR profit or next support. So in this case, when we should have this right there so we can see it. There you see it's the 1 ADR, okay? We can do it like this. We can go to style. We can extend it on both sides. We can just, so it becomes very light, right? This, okay? So this is my 1 ADR from my peak top, right? And that means it's a high probability to U-turn to 2, 3, 4 ADRs. But normally what it do, it will wave down like this, a small wave inside of a larger wave like this, all right? So what we do now, we take the Fibonacci tool, and no, we don't, because we're going to take away the ADR here, because we already know what 1 ADR is. Always would be so messy. Okay, we have this one, right? And when you measure Fibonacci, you go from, well, when you're selling, you go from top level down to bottom level. This is called A, this is called B, the trace is called C, and here you want to find your engulf for selling, right? But as you can see, this is not a Fibonacci tool right now, it's an ADR tool. So what we can do, we can just, normally when I do this more advanced one, like I explained, that you set this to minus 1, 2, 3, 4, 5, 6, 7, and so on, and this is positive 1, because then they will be Fibonacci in one direction, and I think that's one, and Fibonacci in one direction and ADR in one direction. So you have both tools in one. Okay, 0, 50, 61.8. That's basically all we need. And as you can see, it hit the 50% exactly. These are schoolbooks examples, and these schoolbooks examples that you should be looking for. Okay, and now you have done all the work that professional traders do. No matter if you use Elliott waves, the fractional hunter, the hunter system that we also have, but we're not going through in this series, ABCD wave trading, market maker method, whatever method you're using out there, everyone is doing it a little different, but they are actually doing the same thing like in Apex. But we have just cleaned it out from indicators and stuff. We measure the ADR. We looked at, we have gone 3 ADR in one direction minimum. We look for a reversal pattern that reverse minimum 1 ADR. We look for the ABC look for an engulf, and we sell, right? So this is A, this is B, this is C, and this is whatever D, right? And you can measure Fibonacci's for targets as well, but we don't use that. We instead use our ADR, and you can use the Fibonacci tool. There's one ADR, right? And there's two ADR. And your target is up to you to set, really. There is nothing that will always work, but one ADR minimum, that's for sure, right? That's the minimum you should take. You see here you come to a level where it's normally going to stall, went lower this time, next time it won't, and so on. You know, it's not my thing to define where you're taking your profit. I just show you how we do this. Find the peak, measure the ADR, go one ADR opposite, do the ABC, go for an engulf, and go down, right? Now, if you don't want to have this complex system, or I don't think it's complex, but for many it is, because there are new words, Fibonacci's, ADR, levels there, and up and down, and candlesticks and stuff, okay? What you can be doing instead is doing the peak, doing the ADR, and when the one ADR has been done, you simply just sell. And I will tell you that you are going to do pretty much the same results as one that are waiting for this wave. The only difference is that your losses will be higher and your pain will be worse, but we are not here to lose, right? I'm just telling you what you can be doing. So when you're done, when ADR are down here, you sell here. See it retrace quite a little bit up to here. What you always do, even if you enter here or enter here, is you put your stop about 10-15 pips above the highest wick of the peak, right? Because your chances then to win is huge. When you put your stop between here and here, chances you lose is about 60%. So always stops above the A or the head of this wave down. But if you want to make it simple, and if you want to do this in a way that doesn't include Fibonacci's and waves and all the stuff, you simply measure the ADR from the peak in the opposite direction, one ADR. When that is done, you sell, stop here, and let it ride, right? And if you have the guts and the balls for it, what you can be doing is you stay in that order until the next peak is happening, not looking for ADR and so on. Just stay in until the next peak is happening, because that has to happen before it U-turn, right? But what can happen, of course, is it can just shoot right up, and then you have your peak, and then you have to take the next trade. And the toughest things in trading is to handle losses, right? Gains is easy to handle, and that's really weird, actually, because you should not feel that this is your money, this is your company's money. Remember that. And I know it's not that easy to. One thing is to say it, one thing is to do it, right? But you must learn that, because if you were working for a company and it was not your money, you wouldn't have a problem with this. But you will if it's your salary that you put into a trading account. And that's why so many retail traders actually lose, because they get greedy and they have too small accounts and they are too connected to their assets. That is in minus or plus rate. So learn that. Learn how to, if you don't feel good when you're trading, that's because you have too high lot sizes or too much risk in it. Lower it. It doesn't matter if it's 0.001 lot. It's the smallest lot size. It doesn't matter if you do that, because if you're good at this, your account will increase anyway. You don't need to put in one lot on a $1,000 account, which is the fastest way to lose it all, right? Don't do that, right? I'm not going to go into money management and the risk and so on. That is your job to define your own business. Because if you were starting in web shop and so on, you would never ask me how you should do with your cash flow and how much products you should buy and so on, right? Same thing here. We are in the same industry, but it's your business, so you set your rules. If you don't want to do part of what I showed you in these systems, find your own way, find a better way, know a better way, do it, and you're welcome to share it with everyone. That's why we keep this at no cost, because we know what work it takes to actually make this happen. It's not just because you have a system, go out there and trade and win money. Not how it works. And everybody that trades money in the financial market knows that for sure. So thank you again for listening to this video. This was video number 2. The first one was the SMT, the Thursday system. Both are smart money trading. These 2 videos should be your next best asset when you're trading. And welcome to hopefully a better trading experience. Thank you. Bye for now.